All right, welcome back to the Double Play channel where I show you how you can put your money to work in two places at one time by leveraging the cash value of a maximum overfunded life insurance policy. And before we get started, just be sure to like and subscribe to this channel so you're notified whenever I come out with any new videos. Today, I'm going to be changing gears quite a bit. I want to talk to you about a Bitcoin tax-free Bitcoin retirement plan. And this is going to work very much like a life insurance retirement plan, as you're going to see. But stick around after the intro. You definitely don't want to miss this one. All right, thanks for sticking around. I'm Tom Rutkowski with Innovative Retirement Strategies. I'm a life insurance agent. I specialize in designing maximum overfunded life insurance policies for leveraging into real estate or for tax-free life insurance retirement plans. The goal of today's presentation is to show you how you can generate tax-free income from Bitcoin, just like you can with a life insurance retirement plan. And we're going to launch into that here just in a second, but I want to make a quick pitch for my other business, Radical Recovery. So if you're obese or you're diabetic or you've got some other chronic conditions that you think might impact your ability to get life insurance, I want you to check out radicalrecovery.biz. And I offer consulting services, health coaching services that will help you heal yourself before you apply for life insurance. So be sure to see the description and download my free weight loss protocols and check out the Facebook group at Radical Recovery on Facebook. All right. I also want you to know that all this information is purely educational. There's no financial advice. There's no tax advice, no legal advice being offered here. It's all educational. I'm just trying to show you how you can use or leverage your Bitcoin for tax-free retirement income. I'm not selling Bitcoin. I'm only selling life insurance. All right, so before we get started, there's a few fundamentals that I think would be helpful to watch either after this one or maybe even just pause this video and go back and watch my videos on life insurance retirement plans so that you understand how they work. Because I don't want to dive too much into the details. I want to focus on the Bitcoin aspect of this. But the basic function is I am almost identical to how a life insurance retirement plan works. That is, you leverage your assets, you take loans secured by the Bitcoin, or in the case of a life insurance retirement plan, you take loans secured by the cash value. And that's the way that you get income tax-free. So I just briefly want to cover how you use leverage to maximize tax-free income, both from a life insurance perspective and from a Bitcoin perspective. Once you start taking income, you're going to want to think about how you're going to get out of this. So there's two different ways of getting out of it that I'm going to discuss. And then I'm going to show you the pros and the cons. So let's get started. The first section is using leverage for tax-free income. As you know, when you borrow money, you're getting that as a loan. You're not taking anything out. It's not income to you. So in a life insurance retirement plan, life insurance companies are obligated by state statute to make loans to their policy owners secured by the cash value of those policies. And more recently, I found that you can do the same thing with Bitcoin. More and more companies are offering loans that you can use your Bitcoin as collateral and get a loan secured by it. And the reason you would want to do this is that you get to keep your Bitcoin. You don't ever have to sell it. You just simply use it as collateral, like if you were taking a home equity loan, for example. So the companies that I'm aware of doing it are Coinbase and Strike. Those are two companies that I use, and there's more out there as well. And the reason you would want to do this is that you can get much more income from your savings than you could if you withdrew it. And the important thing to keep in mind here is when you borrow against it, your collateral, your Bitcoin remains untouched. You're not taking a withdrawal. Anytime you take a withdrawal, you're reducing the amount of Bitcoin that you have, and therefore whatever growth there is doesn't amount to as much. So when you borrow against it, you still hold and control 100% of the Bitcoin. And one reason why this might be even better than a life insurance retirement plan is historically, Bitcoin growth is well in excess of what you might expect on a life insurance policy. But, short of life insurance and Bitcoin, I'm not aware of too many other assets that allow for loans like this secured by the cash value. I know you can get loans against securities, but the loan to value ratios are awful low because of the volatility. So here are some of the companies that are offering loans right now. Bitcoin and Coinbase and Strike are two of them, as well as Lava and Capo. I'm not familiar with it all, but I did catch that release on Twitter or X now, and I made a screenshot of that. All right, so exit strategies. Yeah, I know you're thinking, if you're going to take loans and take loans and take loans for retirement income, at some point in time, those loans need to be paid back. So how does that get accomplished? So there's two primary ways of exiting this option. One is when you die, you just simply use the Bitcoin collateral, or your spouse or your heirs, whoever's doing your estate planning, just uses the Bitcoin and cashes out the loan. Obviously, they'll never let you borrow any more than you have as collateral. But a better option, where I come into it, is using life insurance to pay off the loan. When you use life insurance, you can set up a policy and size it such that it will cover the amount you expect to borrow over a lifetime. So now we're talking about some planning requirements here. But what happens then is that the life insurance pays off the loan, and your heirs, will get the Bitcoin and the lifetime of appreciation on 100% of the Bitcoin, because you never sold any of it to take all those years of income. So again, this is going to require some planning. One, we need to make sure that you never borrow more than what the death benefit will cover. And you can tell term insurance would probably not be an option, because it would not be a good thing to outlive the term policy. So this is a case for a low-cost, guaranteed universal life insurance policy, or perhaps just a whole life designed for death benefit protection. But the last thing then too is we want to couple this with estate planning strategies. So if you expect to be in an income bracket or wealth bracket that would be subject to estate taxes, then you want to also think about setting up what's called an irrevocable life insurance trust, ILIT, and put the life insurance into that. And then that way the premiums go or count towards your gift tax and fund the life insurance policy held inside the ILIT. And then the ILIT pays off the taxes, and everything is kept outside of your estate. So that's the beauty of that. And there's a number of different estate planning options we can discuss as well. So what are the pros of this strategy? The biggest pro is that you get to preserve your Bitcoin. Like I said, I'm going to reiterate this one more time. You're not taking any Bitcoin out to generate income. You're using it as collateral, and you're getting a loan secured by the cash value. So 100% of your Bitcoin remains in your account and continues to appreciate. And if you're a Bitcoin investor and you're watching this, you know what kind of appreciation we can expect. I think there's some good times coming ahead. Another pro would be that you can get much more income from this than by selling each year. 100% of the Bitcoin continues to appreciate in value instead of 96, 92, 98, or 88. And the reason I'm saying that is if you took a withdrawal, that means you're taking Bitcoin out. You don't have it there anymore, so it's not earning anything. And that's why you're not going to get as much income by doing straight withdrawals as you would by taking loans against it. And that's the same reason that a life insurance retirement plan can generate so much more income than traditional investments. Everybody overlooks life insurance. They don't think it performs as well as having money in the stock market. But at the end of the day, when you look at the numbers, a life insurance retirement plan will generally, dollar for dollar of investment, produce much more retirement income, like almost 2 to 1. So here's a couple slides. I just want to show you the appreciation since inception and for the last year. So on this graph here, we're looking at current price as of I think it was yesterday when I took the screenshot, 118,788. But over time, since December of 14, you can see just how much it's gone up. I mean, clearly it's been a little bit of a wild ride, but for more recent history, I mean, it's been a pretty steady increase with a mild amount of volatility in it. I've been holding it for about 3 years, and there are some times when it's down. But I don't have any intentions of ever selling my Bitcoin, so I just weather the storm, knowing that as more people adopt Bitcoin, as governments get into Bitcoin, as more companies start to hold Bitcoin, it's only going to go up. 23 million shares divided by more and more and more dollars. So here's the annual appreciation just for the last year, and you can see that it's gone up dramatically since the election last year. We were in a holding pattern, and once the election came, things shot up and then slowed down a little bit and then started rising again much more recently. Nonetheless, I'm quite happy with the performance on my Bitcoin. I don't just give my numbers out, but I mean, most of it I acquired at $35,000 or under. So, I mean, I'm looking at triple my money right now. And when I look at what this is going to be able to provide for me in terms of retirement income someday, it's quite exciting. All right, so it's not all upside. You probably want to know what the risks and downsides are of this. So let's take a look at this last slide here. Everything has risk. If you truly want to eliminate risk, then talk to me about guaranteed annuities. We all know lots of people whose retirement plans were thwarted by market drops. Just a few years ago with COVID, and times before that, 2001, 2008, 1987, if you're old enough. There are plenty of times, and I know lots of people who had high hopes of retiring, and a crash in the market just changed those plans overnight. So the first caveat is that it requires planning and knowledge of leveraged tax-free retirement plans. So basically, this is my expertise. I do maximum overfunded policies that are designed for providing tax-free retirement income. Here, there's a significant planning obligation. We need to know how much you can take from your Bitcoin so that you don't run out before you die. I mean, I hate to say it that way, but that's really what's happened. You don't want to run out of money. So if you take too much, you'll exhaust the collateral too fast. If you take too little, you'll leave a lot behind, which may not be a bad thing. But the risk is that you exhaust your collateral. And what with Bitcoin, what happens then is once you violate your loan to value, your lender is going to take the collateral as the security for the loan, providing you don't. Well, they're going to require that it be either the collateral increases to meet the proper loan to value ratio, or they're just going to collect it to satisfy the loan. So don't let that happen. Work with an agent who understands life insurance retirement plans, and we can work together to figure out just how much you can safely take each year so as to not exhaust the collateral before you die. All right, second big bullet point is assumes that the growth of Bitcoin is greater than the loan interest rate. For the most part, that shouldn't be a problem. In the case of life insurance, it's rarely a problem. There's almost always an arbitrage that you get between the rate of growth on the cash value and what you're paying on the loan interest. So you can take a little bit more than what you should. You're not just tapping into the growth. You're tapping into the collateral a little bit each year to use it up a little bit. Now with Bitcoin, the appreciation should be much greater than what you would expect with a life insurance policy. And the gap or the delta between the growth rate and the loan rate should be rather large, meaning your collateral is growing at a much faster rate than the interest that or your accumulated loan balance that you're collecting. So not a huge problem to solve, but just something to be aware of as you're setting a plan like this up. And finally, the loan to value. Um, Life insurance is a very safe and principal uh, protected asset, and therefore the loan to value is typically up near 100%. But Bitcoin, not so much. The loans I have right now through Coinbase, it's like a 5% interest rate, pretty darn low in today's environment, but it's a 50% loan to value, meaning I have to keep Bitcoin as collateral necessary to satisfy that loan to value that I need. So that does impact how much you can potentially borrow. When you take loans against a securities account, it's the same thing. You typically, 50% loan to value just based on the volatility of the stocks that are in the portfolio. But it's not the end of the world. I mean, if we see the appreciation, the kind of appreciation I think we're going to see over the next few years, your collateral is going to keep up with and provide income based off of that, just that 50% that you can access. And I guess the last point is just, it's important to remember that the reason you're getting a really good rate like this is that their loan is 100% secured. When you buy a house, you put 20% down, you finance 80%. That gives the lender a little bit of a buffer. But, if the housing prices decline, they could be at risk. Here, they don't want to be at risk at all. So that's why you're getting a good rate, and that's why there's only a 50% loan to value. So wrapping up, I just want you to remember that your Bitcoin can provide tax-free income for retirement and generational wealth. You can keep it all intact if you strategically access the Bitcoin with loans rather than taking the Bitcoin out. It's a very sophisticated strategy. I don't know that I've heard anybody else on the internet talking about it. I mean, I literally just kind of, when they came out with loans several years ago, it just dawned on me that this could work just like a life insurance retirement plan. So hopefully this will get lots of views. And before I close out and wish you on your way, if you're not hoarding Bitcoin yet, be sure to get started as soon as you can. Don't get left behind. Bitcoin has tripled, it's tripled since the election in 2024. This is being recorded in July of 2025. Contact me for affiliate links. If you do that, we both get dollars. I can't give you a code. I just need to give them your email address. But you can get money. I can get money. And you can also set up a Bitcoin IRA. So reach out to me if you're interested in that. Again, we can both get a bonus for signing up new clients. You get money in your account, and I'll get a little bonus in mine. So with that, I will see you in the next video. Enjoy the next month.